Hello, Andrew, Jonah, and Jeff. Like Karen said, this panel is all about gaming. And to get us started, I thought I would share a few statistics. So according to Statista, the revenue in the video game segment is projected to reach a valuation of almost $200 billion in 2022. Revenue is expected to show an annual growth rate of 7.7% in the next 5 years. The largest segment is mobile games, and the most revenue will be generated in the US. And the average revenue per user this year was $80. So to tell us more about this, we have Andrew Batey, Jonah Blake, and Jeff Pabst. Andrew is an accomplished entertainment and technology entrepreneur and early adopter of major industry transformations across music, social media, and Web3. Now, as a founder and co-CEO of Beatdapp, his focus is on helping music labels and artists collect royalties and combat streaming fraud through blockchain innovation. This is a Vancouver-based company, and it offers a tracking system that authenticates, verifies, and validates media streamed in real time, and has been recognized as a top 20 music company globally by Crunchbase. Jonah is a vice president of global partnerships at Blake Media Ventures and CGO and co-founder at Game Fund Partners Group. He's also the co-founder and CEO of Real Third Web. He's also the original creator of the Proof of Information Protocol and tiered ranking model for blockchain designs, and he has extensive experience and hands-on development in patent creation and product design. Previously, he worked for the vice president of production at Warner Music Group's record label, Atlantic Records. And last but definitely not least, we have Jeff. Jeff is the chief commercial officer at Loaded. He is leading the company's business, defining it as the preferred marketing vehicle for brands and game developers. He is developing the roadmap to make the dominant gaming firm more innovative around unlocking new commercial opportunities for the creators and introducing new content programs around Web3. He has almost 20 years experience of gaming, tech, and brand expertise. So with those three introductions, we can kick it off.
Yeah, I think, well, I don't know Andrew, but it's a pleasure, but I invited Jeff here, so I'll do the honors. I know, it's a pleasure to meet you, Captain. So, yeah, so Jeff is a pretty big deal. I'm gonna reintroduce Jeff, mainly because I don't think the investment world, which I'm largely a part of, and Jeff is now a part of, and I think people should take Jeff very seriously because he has knowledge that most investors just do not have, superior knowledge. His company is pretty important. It's probably one of the most, if not the most important content creator management firm in the United States and probably for most of Europe. Just for context, his content creators pretty much own Twitch and parts of YouTube gaming, and his audience, well, his content creators that he manages garner at least 200 million views a year. That's not including monetization as well as product and business that they're being developed under the brand. So, Jeff, my question for you is, because I heard this before, as I was listening to the prior talk, one of the individuals.
Jonah, I know you want to get to your questions, but we've got to let Andrew.
Okay, I didn't know, my bad. I apologize. I didn't know the setup. We didn't do training. I'll leave it to you.
Okay. Jeff, I would like for you to correct Jonah on any things that he said after we get, you can correct him now and then we'll get to Andrew.
Yeah, no, Loaded sits at a really interesting intersection in the gaming community where we have kind of seen the rise of the creator, one of our creators behind me, where they have become just mega celebrities in their own right. They can influence platform momentum, the success of publishers and brands' voice. So yeah, I've been at the company roughly a year. Prior to that, I was the CRO at FaZe Clan, which went public earlier this year, arguably the largest brand, lifestyle brand in gaming and esports.
Thank you, Jeff. And so here's the problem with Andrew. I can tell you that this is the first time in 5 years is actually showing up for a conference.
Amazing.
And the reason he's here is because he's very excited about this. We gave him several options. He says, no, absolutely not. I want to do this session. He has not revealed to me all the secrets he's been hiding, but I can tell you in the conversation that we had, pretty articulate and a guy you need to know as well. Jonah, I'm stealing some of your words, and actually it's quite a big deal. If you look at his LinkedIn, half of the things that he's accomplished are not on that. I know you have to leave in 43 minutes, Jonah, so we'll try and let you take stage here. But Andrew, over all the things that you've told me, I'm going to let you share what you would like to share with our audience here, if you wouldn't mind.
Yeah, so I'm an entrepreneur first. I would say I'm an operator. So I've built and sold 5 companies. The last one was in the blockchain space. I started that company in 2018, literally the month that the market crashed down in January. And we have now that company that I'm the co-CEO of. We have almost 40 patents in 7 countries around high throughput blockchain processing. We are the industry standard for any kind of streamed content auditing. So we look for fraud detection. There's a lot of bots and sort of bad actors inside of streaming content. So in general, at least 1 in every 10 streams is from a bot trying to monetize and take money away from creators that have a pro rata share. And so we're sitting there, we're like the anti-money laundering of streaming services. And that's really what we've built. And we have audited transactions. So that's kind of, we're a very deep enterprise B2B play. Most of you would never have known me. Before that, I started mining in 2011 and built a pretty large trading desk since. I've been all over the place. All my other companies are out, did a healthcare startup that I exited, did a peer-to-peer sharing economy with users from 100 countries, grew to 600 people that we sold. Built the world's first Bluetooth self-locking bike and a hubless bike share system, and sold the technology from that. And then most recently too, I started really getting into gaming in 2000 and I'd say 18, 19. I was the very first investor in Splinterlands, which is one of the biggest blockchain games in the world. Before they went and did any accelerators or had other VCs. I like to tell everyone I was way before Animoca. That makes me feel good inside because they just invest everywhere. But it was I've been pretty involved in the gaming space, and I look at it more from a growth lens because my background is building growth models and running fast iterative processes and having growth teams. So I tend to look at things like an operator, and I've invested in over 130 companies. So I also have sort of the VC hat on constantly.
I will let you, this is a very exciting topic. Jonah, can you help moderate, run, and get us up to speed? I know you've invested in a lot of companies. By the way, we're also an investor. We just bought on Epic Games, so that's on our platform. So just, this is very exciting. We hear from a lot of people that this is a very, very up and coming market, and a lot of people don't understand it. So given that context, you've got the next 30 minutes to really bring us up to speed.
Yeah, so hosting is kind of what I do for a living. So I'll get into the hosting thing in a second. I'll bring you up to speed on what I'm doing, because my background is my background, and the past doesn't exist, the future doesn't exist, the present. So what am I doing in the present? So yes, we have invested in companies. We do SPVs, so that's kind of how you and I, right, have connected, and we both have that understanding of the space. We already invested in Discord. They're enabling monetization this week. We're very happy about that. We'll see how that performs. And we've been investors in Epic Games. Very happy with that. They just released Unreal Engine 5.1, which improves the lumen as well as the amount of LOD on screen. I know enough about games to actually speak about them in context. So there's a reason why that matters. I did write a primer on Epic Games research for fun because our firm already did DD, and I was like, oh, you know what? I'll put it out as content. And it got 100,000 reads. That was pretty cool. I am now, by accident, a content creator, which is why I brought on Jeff, because I may know things that Jeff doesn't know, but Jeff certainly knows a hell of a lot more than me about content creators and how they make money and how they do well. And I'm probably the top 3 biggest Web3 gaming creator in the Western Hemisphere by now. Most of my content is dominates on Twitter, which is where most of the traders are. I did my year-end, well, not my year-end, my month-end report for November, and I hit 5.1 million views across my Web3 gaming content, which is pretty impressive considering most of Web3 gaming doesn't really exist yet. So I expect my numbers to go up. Why would I create content when I'm an investor? What's the point of that? Well, in my belief, and I think this will shock many people, and maybe I don't know a lot because I'm 27 and people are probably 2 or 3 times my age here. But what I will say and what I do know is, or at least I think I know, is probably by the end of this decade, funds will not exist. They will not survive, in my belief. Why? As well, in gaming, let me specify, in gaming and CPG. I can't speak to the other industries. That's not what I specialize in. Quite frankly, it's because most investors don't realize that publishers are not in business because they're great VCs. It's because they offer a lot of live ops and marketing value to game devs who cannot market a Apple if they wish they're just not possible. The other fact is most game devs can get pretty democratic capital, whether it's from a publisher or a platform that needs new games onboarded, wherever it may be. The democratization of CPG is quite broad. The last part is owning your audience. Quite frankly, I think any fund that is going to be worth their weight in the end of this decade will have to either be a media company, a live ops company, or be a part of a larger company. Because a lot of investors say that they have strategic value add, and then you find out they don't, they just have a nice check. And that's not enough to get your game to market. And so I brought Jeff here because Jeff has been doing the thing that I've now started doing, which is managing creators who will eventually become investors. And effectively, the stuff that he does at Loaded is the burgeoning beginning of what funds will look like in the future in the CPG space, which is content creators becoming investors in a, let's say, a Loaded style LP. I'm not saying he's doing that, I'm just giving a sample. And we already see this with first evidence with a group called Night Media, which manages Mr. Beast and very large creators. They have Night Ventures. They take on LP, which is their own creators they manage. They take a cut of those profits, and they reinvest them into companies that not only may provide a lot of returns for the LP as well as the GP, but also it's great content for creators to develop. And so they're building a flywheel around investment where investment becomes content. So I've decided to take it upon myself to build a media company within our fund because I believe that why would anyone believe you could do it if you don't do it yourself? So that's what I do. We're doing a very good job. We have probably one of the top podcasts for Web3 gaming in the world. And so, Jeff, my question to you is, where do you see content creators building businesses, the cycle of churn? So we talk about, I want to talk about turning creators into investors, and you effectively manage them like a GP manager, effectively, an agent manager. Talk to people here about the churn of content creation and where you're seeing the burnout between Twitch and YouTube, and how that burnout is actually leading to more inventive practices for content creators to earn money.
Yeah, no, I think it's a really interesting kind of question is framing, like in the grand scheme of things, like in the gaming universe, like Twitter, Twitch, and YouTube are at the center of it. And we've seen some the emergence of TikTok, which is clearly, becoming a big priority, primarily around discovery, right? So a lot of creators, they have a shorter shelf life to date. You think about even Andrew, who was talking about his entry into gaming in 2018 to fast forward to 2022. It's fundamentally a different marketplace. In 2018, you had Fortnite, which became this global phenomenon. And you saw the likes of Ninja, who was previously managed here at Loaded. And suddenly he is on the cover of ESPN, the magazine, arguably one of the most recognizable faces, even 4 years later. But beyond that is this huge thriving community. And so Twitch and YouTube have really cornered the live streaming market from engagement and audience and just cultural relevance. On any given week, you'll see, some of the biggest celebrities in the world, including the likes of Drake jumping onto Twitch. In a previous life at FaZe Clan, we did a sponsored stream, and Daniel Craig promoting 007 was there with Billie Eilish live on stream. So culture is happening, commerce is happening. And so us as a company, it's really important that we help guide their long-term thinking, not just for how to get some brand deals or AdSense revenue, which is how YouTube pays people out, but really about how can they build businesses that they own and control for the long haul. And I think it's also where a lot of Web3 opportunity really starts to come into play.
Yeah. Well, there's one particular creator. There's two. I'm gonna call out two because I know your creators. Well, three. There's three. I know your entire creator stack, right? Because we talk a lot. So I'm gonna ask you to paint me a picture around three of them. The first being Shroud. He is one of the largest content creators by far in the world. Gaming. He's a professional. Now is actually Valorant roster, is a professional esports creator, and he has a rebranding on his branding has changed. Like it's more PC friendly. He's building PCs now. We saw that. So I want to hear about that. Tell me about Myth and Shrapnel with Web3 and how they're working on advising and corporate management. And then I believe it's, I may get this wrong. Is it Ludwig's girlfriend that I believe, or is it I mess it up. It's Cutie, right? I think that's her name.
Yeah, those are three of the most, I think, creators as producers really on the Loaded roster. Now, I can't really speak for them because they're so different. Creators there's a lot of fragmentation that exists within gaming. Certain creators are hyper aligned with a specific title. For example, somebody like Shroud, who has his roots in CSGO, arguably one of the best competitive players, just a straight like aimbot, which is a term for just being absolutely insane at the game. He is more first-person shooter focused. So his audience is very used to going to his channel and seeing him play that type of content. Now, he is crossing over. Like right now, he is doing a sponsored stream actually with Lando Norris, Logitech and McLaren. So, he does cross over. Then you flip the script on Myth. So Myth, we signed him earlier this year, and he's really just one of these can do everything. And I think you're seeing more and more creators who used to be just aligned with a specific game. Like when I think of Fortnite, I think of Ninja, but you're seeing this next generation where they can play anything. They can watch YouTube videos and make it compelling content. And the last person you mentioned, which is Cutie Cinderella, this creator is producer. She's producing events that rival what you'll see in traditional sports. She introduced something last March called the Streamer Awards, and there was over 400,000 people watching her live. And she's just like, hey, I want to pull this off. And I want to do an award show to recognize the accomplishments of my friends. And her own project manager, she works with us to do commercial assets. And so each one of these creators is unique. Each one of these creators has their own audience. And I think that's something that's just important when people are surveying the marketplace, being like, all right, what creator makes sense for my fund? Are they interested in being a part of the process? And really formulating things where they feel like they want to be a part of the project. So then, the word authenticity gets thrown around, that it feels real to themselves and it feels real to their community. And when that happens, it's when you see, incredible returns on some of these businesses that can scale really quickly. For people on this call probably aren't so much into the creator world. Mr. Beast's burger does grosses more than $100 million a year.
That's not including the Mr. Beast chocolate, which is in the front of Walmart, almost every Walmart in the world.
Yeah, if you go to Costco, you go to Walmart, you're starting to see more. It used to be just the Kardashians, like licensing their name, getting behind a project. You're seeing creators now with a lot of scale, and I think that's kind of the beauty of this. If you have children who are, younger than 15, if you ask them who the person they want to meet the most, it's probably going to be a creator you've never heard of.
So I'll tell you why I chose you, Jeff. Everyone chooses you, so you're not special, but I'm going to say why I chose you. Yeah, right. It's an LA thing, but so I'll tell you why. I love studying structure and infrastructure. And I model what I do at my fund off of Loaded. And you and I have had that conversation. Like there's a lot that I can learn from the company you manage. Because when I look at you, I say, this is what the future of a fund manager is going to look like, at least in CPG or any consumer related business. Why? Because what you're doing starts off as a venture builder. Effectively, you're an agent, right? You're an agent first. You're putting deals together. You're helping them make money on their content. But what you're really doing is you're a venture builder. And then you're taking those ventures that you're helping creators put together through relationship, through infrastructure, through your other team that has, all the traditional degrees from all the traditional Ivy Leagues. And once they're at scale and they're generating real revenues, you can then say, hey, Cutie, hey, Myth, hey, Shroud, you make, $5 million a year. What would, maybe you make 10 million a year, because they do, this is not crazy money. This is actually like, they do make this kind of money. This is at that level, right? They do make that kind of money. Why wouldn't you put a certain allocation of that per year into a fund that Loaded manages or that another group manages? And all of a sudden you have a full ecosystem setup where you can really allocate serious capital to many projects. And it starts becoming a flywheel, because what happens is now you have all these companies who are desperately looking for a product market fit, and you already have the market. You just need the product. So a lot of startups, at least in CPG and gaming, almost all of them fail. 99% fail because they do not make product market fit. So if you're a fund or you're an entity that has the market to bring it to market, then you have an extreme competitive edge on any other investor. It doesn't matter if you went to Harvard, you went to Stanford, it doesn't matter what school you went to, because if you don't own the audience, your network value for acquiring capital is worth about as much as me doing a TikTok video talking about pajamas. Like, that's about the equivalent of that value in our world.
Before you step in, Jeff, Andrew, there's some thoughts that have been expressed here that may be controversial.
Well, I felt like Jonah just wanted to interview Jeff, which is totally cool. So I'm just happy to say.
Andrew,
it's fine.
Andrew, first of all, I love your beard. I'll never grow your kind of beard. I don't know your background. Jeff, I know, so I brought him here. So if I would love for Karim, if you want to, talk to Andrew's strengths and what he sees in the market, that'd be fantastic.
No, this is an area I would say, look, I don't really mess with creators much. Like, I used to be an agent for film and TV. I've sold a lot of big properties. That's how I started, my original career before I got into tech. So I think there's a lot of similarities, or I feel bad if you're managing creators. Like, hopefully they're not as hard as actors or others, because it's a lot like babysitting. But I would disagree with you in the fact that I don't think VCs are going to be dead here. I think funds are going to be just as big as they've ever been, but they're going to have to be more involved. Like, one of the things that I've done and worked really hard on is going into assets early. Like, Evaverse is a game that we own probably 15% of all the assets in the game entirely. We built our own guild. We manage our own guild playing there. We try to train the players. One of the guys that I work with regularly, one of my colleagues, he manages the entire guild end to end. We built our own tech stack for it, which means now we're dealing with all the infrastructure that guilds require to operate. And so I just think that the proof was going to be for funds, like whether or not you've done it before and whether or not you're actually involved. Like you said, you want to just be able to say it, but that doesn't mean they're not going to be there. I think they're just going to adapt. And just like you have platform support with funds, for VCs where you're like, let me help you recruit, let me help you do whatever, you're going to have platform as for games. So you're going to have like entire VCs, I think, dedicated to building out, guilds of their own, or investing into the infrastructure and being a real ecosystem partner.
I find that to be unlikely. And I'll tell you why.
I'm telling you, it's happening now.
I work in the space too, and I can tell you, I know the numbers. And maybe in Southeast Asia that works. It does not work in the United States, nor does it really work.
That's because no one here is building games people want to play. Everyone's
there are multiple actually in production.
Everyone's focused.
I've seen over 10 of them.
I think one of the things, and just hear from both of your sides, I think it really comes down to community, right? From an investor standpoint, are you going to understand the market that you are investing in? I think it's one of the challenges I think we've seen primarily around like Web3 and crypto in 2022 in particular, is just because a lot of these businesses were very raw and they were an idea of a business in a market that wasn't necessarily mature. I think that we've really you've got to understand the nuances, because things can go off the rails. And I think that's one of the really interesting things where I think everybody's looking at crypto and Web3 is this blockchain application solution finally. I think we saw it with a lot of the decentralized finance and some flaws in that model, but I feel like the mainstreamification of crypto and Web3 is all roads lead to gaming short term. And I do believe that there's going to be a really interesting opportunity for creators and funds to get in early. And to your point, Andrew, to really like guide the strategy, because I think a lot of these publishers are going to need help, whether it's coming from a venture side or it's coming from a creator or it's coming from a talent management company like ours. I think, you know, the world's moving really quickly, and we've just got to look at, you know, every company is different with their needs and wants.
I would
think
ask that people look at Andreessen Horowitz's recent hiring list and see that a majority of them come from publishing and from market.
Yeah.
It's let's just elevate the conversation just a little bit. There are value propositions that each one of us has on what's investable and what we think the next home run will be. And let's break it down into various aspects of the creators and the creator economy, but then also about the infrastructure and the infrastructure play on the gaming. Now we look at the various talents that exist in Asia, and we look at the various talents and infrastructure that exists in North America and Europe. And we've got to separate those two in terms of why are you doing what you do and for what reason. As a creator and as a name brand, there is certain value to what you do. You've garnered a social influence, and you've been able to monetize that in a CPG value. Agreed, and no conflict. And then you've got the creator economy. If you've got the vast number of population in Asia doing this to earn to live rather than anything else, that's okay as well. But let's elevate this and says, okay, if we are looking at the infrastructure play of the gaming and the creator economy, the gaming, I would like to just tap into, and Reggie's online here, and I'm hoping he joins later, or I'm hoping Andrew stays for that panel actually. And when we look at some of the things that you're doing under the IP level, infrastructure level of the gaming industry, how well are we protected as new creators of and creating new companies and games? How do we manage that? And I'm going to ask first, direct this to Andrew. The next question is Jonah in terms of investments, and then a little bit on the creator and the developing creator to Jeff.
Sorry, what was the direct question one more time? Jonah, you can jump in. What did he ask at the end there? I lost him at the end.
Well, I think he wanted us to each talk about the elevation of gaming and creators from each of our lenses. So from my expertise, your expertise, and Jeff's expertise.
Cool.
So Andrew, let's talk with the fundamental of your IP level.
Yeah, so the things that I think about in gaming is when blockchain makes sense. So like right now, if you use blockchain for first-person shooters or something, it's actually not that great. Like you can't scale that because the blockchain is not fast enough. I think companies like Miston Labs or some of these who build maybe higher throughput blockchains that are public, you might be able to apply that. And when I think of it primarily in gaming. My lens is heavily weighted towards crypto Web3 because that's like the area I live in. So there's two different worlds for me. There's like core like AAA games, and I think that those will start merging into Web3 capabilities. And I think you'll see this sort of like, my perspective is you'll see this, it's already happening, but I think you'll see this convergence overall. And I think you have like core Web3 native games that can persist and build. And my issue with the games now are that I think that they're just not scalable with the current infrastructure that's in place, unless it's like a trading card game or turnstile game or something that's not as dynamic as like a immersive game. So I think that it's just a different experience. And then the other thing that I would say is that, because crypto became so big, or it's been big, but I'm saying because there's this last bull cycle, everyone was just so hyped on selling NFTs or digital assets, and like the play to earn model, like everyone just copycatted into that. And I felt like it became kind of like, a new wave factory indentured servitude. Like you give these people these assets, they're just constantly playing to make money to survive. And to me, that's not the heart of gaming. Like, people play games because they're fun to play, because they enjoy playing them, because they want to participate in that community, in that ecosystem. And so from my lens, when I'm looking at games, I'm trying to exclude the games that are economically based. Like, when I'm looking to invest in games, I'm not trying to invest in a game where I think people are doing it for money. Like, I want them to be playing the game because it's fun. Either that's a casual game or it's an immersive experience, but either way, it's a fun thing they like to do. And I think, like, trying to look at the data is what I try to do. And that means pulling apart different wallets and figuring out how diversified they are and who's the whales and how much are they buying across, platforms, and like, where do they bridge into other places, where there's community coming from, what's the average sort of activation rate across wallets, how often are they active, like all this sort of data stuff that tells you have a really strong community. And the community is only there typically because they really like the game. And so I'm trying to, that's my lens, is like, does the infrastructure make sense for what they're trying to build, and is it actually fun? And those are the two lenses I think that I'm constantly looking if I'm going to invest. Sort of bring it back to basics. Like, if you're not a gamer, that's fine. If they're going to be a commercial hit, you have to be able to play the game and understand how to play it. And I think that's important.
I think the one thing, Andrea, and it's like kind of funny to like hear, is just like we have to state with Web3 that these games should be fun, right? That's why people play games in the first place. It's a moment to escape, right? It's a different form of entertainment. It's like a truly immersive experience. And I think one of the issues that we've like identified like short term is we're trying to skip to the front of the line and skip like the process and how the sausage is ultimately made. Valorant, which is arguably one of the top games worldwide, produced by Riot Games, it took them 7 years to develop that game. And so, we're seeing some lighter versions of games, Splinterlands being one of them, which is, a breakout hit within the Web3 world, but it's a lighter touch game. And so you're starting to see games like Shrapnel, which are coming down, Alluvium. You've seen it with like Blankos, which is from Mythical Games. And you're seeing a little bit of promise. And I think, going into 2023, I think there will be one game that's going to cross over into the mainstream. And I will, a lot of the investments that you've seen from venture funds going into the marketplace, I think it's going to really excite a lot of the investment community, because you're going to see just a whole dynamic marketplace around interoperability of digital assets. And so, Kareem, one of the things that's funny about the games business is, globally, it's roughly a $200 billion a year industry. Well, almost 50% of that revenue comes from free-to-play experiences. So you're not paying like a $70 fee to play the game for the first time. It's free, and then digital items. And so if $100 billion roughly is being spent in the marketplace, the ability to trade these things for other assets and money, I think becomes a very interesting world. And I think that's what part that gets me the most excited.
So, Jeff, thank you for that. And actually goes to one of the points, and I know Jonah has to leave shortly, but we've talked about Andrew's perspective and your perspective that you just mentioned about the size of the industry. And the question really becomes, where is that money going to come from? If we take a look at perspective from Jonah, he's suggesting that the investment strategy going forward will change dramatically. So, Jonah, how do you then view that?
I don't think it'll change dramatically. I think funds that are going to survive in gaming, and again, I'm not talking about other industries because that's not what I specialize in. If you want to be a fund in this space, you're going to have to become a publisher. Just plain and simple, in some capacity. You're going to need to understand live ops. You're going to need to understand marketing. You're going to need to understand creator, and you're going to need to understand EULA agreements and the whole thing. You can't just write a check into a gaming company and hope it succeeds. It just doesn't work like that in the gaming world. And the other part is why I don't personally believe in guilds. They are very much like esports orgs, and having worked in esports, I know the revenue margins are small to not at all, largely, unless you're a top, right? Unless you're like the FaZe or the 100 Thieves, like it's a very small threshold. The other aspect is risk on capital. So let's talk about risk on capital. Right now, ETH and Bitcoin are largely correlated to the stock market, okay? So it's already has a correlation. It's not necessarily a different asset yet, even though I know crypto, and I agree it is, the market doesn't see it that way. So then on top of that, you've got a game. That's already a risk on top of that. Then on top of that, you have NFT assets, which their money will be about, part of this will be about money. It'll be a mobile gaming business first, because it's going to be an Asian studio that will probably break out first, likely. Not saying that's for sure. So you already have 2 layers of additional risk. And then the third is, as a guild, your job is to acquire NFT assets or tokens and manage people under that. And you take a cut of those fees. So now you have 3 additional layers of risk. And your NFT is not even, your NFT is correlated to the game, which is correlated to ETH or whatever market, and then correlated to the stock market. And in that case, why don't you just invest in the S&P 500, which is why I believe in free NFTs. I believe in ETH. I believe in Bitcoin. I believe in all those things. But largely, the publishers exist because there's a necessity for them. There are models now around market penetration for emerging Web3 games. And to say that there aren't Web3 games that aren't reaching market, there are some already. EV.io, which is owned by a public esports entity, had over 100,000 DAU for a good amount of time. They've done very well. Another group as of this week called The Beacon, which is a part of the Arbitrum network, which is built on Treasure DAO, which is Magic. And I know about all those DAOs as well. Their game was so popular this week that they moved the price of the token from 30 cents to 50 cents within 3 days. I was one of the few people who made content on it. So I've seen all the games for the most part. There's some I haven't seen. Largely, this is going to be a evolution of the mobile gaming sector, because the mobile gaming is already open to spending money. Spending money and or talking about money is a part of the game. Yes, games should be fun, but there is a thrill to it. There are MMO aspects to it. And if you go talk to any creator like an Asmongold, he's the largest MMO creator in the United States. Most of the content he makes is about player economy, even though people don't assume that's what he talks about. If you go look at any of his videos, that's what he's talking about. So to say that games shouldn't be about economy or games don't have these other risks is just not largely how most of those games, even in Web2, operate at that scale.
So when we look at this, Andrew, the extension of the thought from play because you're excited. Gaming has always been involved, whether we admit it or not, in some sort of wager, whether you're watching cricket or football or whatever it is. It's like, whether it's allowed or not, there's a wager on the back end. So yes, you're playing to have fun, but there's always a promise to win something that's monetary or bragging rights. So having said that, how would you then respond to Jonah in the reflection of the gaming industry moving and correlating with the stock market?
I just think there's way more to launching. I agree that the crypto shouldn't be correlated to the stock market, but clearly it is. So like I think I'm in violent agreement on that. I think that I understand his layers of risk and correlation on correlation. I get that. What I'm suggesting is the motives aren't purely to make money for running a guild. I think part of the reason I'm seeing funds, or at least helping funds even set up their guilds, is to show that they're an ecosystem partner. Bring their guild, because once they have these guilds of players, they can come help product test new games. They can be really active in sort of fast iterative feedback with those platforms that they want to invest into. So someone's going to leave Riot and I'm going to bet on that founder and say, I think they're going to make a really great game and they're going to pull the right team together. We need to also help them with the early alpha versions when it's ready, help them understanding how the tokenomics,
I completely agree with
things
that.
work in
Yeah,
the game.
we're not saying
And
anything different than that.
So I'm just saying that the role of VC won't just be to write a check. It's going to be to manage these other parts and help these portfolio companies. And to your earliest comment about being value add, I'm saying that, running guilds and understanding how the tech stack works and how you can be valuable, almost like you said earlier, you have to be able to do it to know what you're talking about. I think VCs are going to have to do that as well. And that's what I was saying when the goal of most fund guilds that I know is not actually to make money. I mean, they hope they don't lose money, but it's to be helpful for the games that they're trying to help build out. And I think
I think it'd be fair to say that there's also token allocation.
We have Jeff. Some of your thoughts.
Yeah, we're gonna have to separate you two and mute one
Jeff,
of you.
You know me, I'm always like this. This is who I've always been.
Yeah. I think for the purpose of meaningful dialogue, I feel like one of the things that like with Web 2, like there's a few trends that Web 2 gaming, it's like we've seen massive consolidation, right? So, and we're talking the likes of acquisitions in the like the $8 to $10 billion range from the largest companies in the world. When I throw this out there, people are always like, is it Sony? What is the number one gaming company in the world? It's Apple. The App Store generates something like $15 billion a year in revenue via taking fees. And so Web2 gaming is increasingly being controlled by a much smaller subset. And some of the IP that is there continues to be a cash cow. The 2022, we actually saw a contraction for the first time in overall revenues. But it's basically because we're coming off of two of the most record high pandemic filled years where people were just, it was how they were keeping themselves entertained. And so, even with this contraction, we saw Call of Duty generate in 2 weeks over $1 billion, one of their biggest openings of all time. And so you're seeing this shift in this model from this like kind of movie release schedule where you have like, a single 2-week period you need to capitalize on all your sales to this migration, which is coming more around live services. So a live service is like a Fortnite experience where it is an experience that you would play throughout the year, but what you're playing is actually changing over time, which creates excitement and brings back players into these games. So I think a lot of people are viewing this like Web3 and blockchain gaming as like, hey, it's going to change everything. I think it's going to be complementary. I think we're going to see some innovation around the technology side that we haven't seen in quite some time. And everybody's pointing to VR a few years ago, AR. Blockchain, I think, solves the simple fact that I might be able to take assets that I own and play them in a different experience. Myth behind me is playing Spider-Man. Imagine a world where an NFT that I purchased in my favorite blockchain game or an asset I own in Splinterlands, I can take into this experience and it's rewarding. So like the world is getting a lot more interconnected.
Sorry,
and
Jeff,
I think that's the excitement.
John has to leave us in a minute, but I want him to have the opportunity to close us out with his thoughts here, and then stay with us, Andrew and Jeff. We've got a bunch of other questions.
Yeah,
So if I were to ask you this question, we've got investors who are going to be listening to this audio video. What is the 1 or 2 recommendations that they should be looking at if they want to invest in the gaming industry?
The first is stop trying to make everything a platform because we have too many platforms. If you're looking at a company and you're looking to raise on a game tech stack and you're trying to build like the next great platform, I understand like the odds and like, if it wins big. But ultimately, if you're going to invest in this space now, I think the opportunity is around content. The returns are not as high. Maybe it's a 3 to 5x versus your 10 to 100x. But it's also more likely that you'll get your money back versus on a platform because the cost of building one in a competitive environment like this is nearly impossible. I want to answer Lori in the chat because it's good to answer the chats. Lori says, what about mental health related gaming? Will this be mainstream? It already is. There's a company called Achille Interactive. They have the world's first federally approved game drug that helps treat ADD, as well as there are a number of studies that are working on treating PTSD using VR. So gaming and mental health is going to be a greater thought around this decade.
The PTSD thing's been around for quite a long time. I remember touring facilities in the early 2000s in Santa Monica. And that was like one of the biggest things that they did was, put headgear on you. It's like a whole immersive experience, and how soldiers coming back from war, being able to sort of address some of those issues. And it was quite a cool experience to participate and see. And that was 20 years ago. So I can imagine that's just going to get significantly better.
So there's one, I'm forgetting the name. It's a wonderful woman. She used to work at CNN. She started this company and it's an add-on to the Quest. So you don't need a special headset for this. It's like, I think 50 to 100 bucks, not a lot. You attach like this rubber band around your head. And it's a game that you play, and it's a mental meditation game. So it actually reads your brain waves. How, I don't know. Maybe it's a scam. We'll find out. I don't think so because it's done well. It has capital raised. And effectively, the game is teaching you meditation. mindful meditation. So there's also that as well. So there's some amazing founders in the space that are worth looking at with gaming and mental health.
And actually, I wish you could stay, but that is really a good takeoff to my next question. Jonah, can you stay or do you have to go?
I can do 3 more minutes.
Okay.
3 or 4.
So I was actually going to go with that question that you mentioned, right? With the simple aspect of mind, meditation, and gaming. And then, Jeff, after that, I want to go back to you and circle around with the AI thought. But if you look at gaming as a wellness tool, rather than player one or those shoot to player one things, where is this? And during the course of this next couple of days, we're actually going to have a session on psychedelics and innovative tech. So talk to us a little bit about what you're seeing, Jonah, in the innovative medical gaming environment that you may have come across to that improves solidly the player experience as well as create wellness.
Well, the first, as I said, was Achille Interactive. I mean, there isn't a company like theirs that I'm aware of that has a like FDA approved gaming drug. And you cannot get this game unless you get it prescribed by a doctor. Like it's not, I mean, you could hack and, hack your way into it, because I'm sure like with Jeff has plenty of creators that could figure that out, but it's a federally approved drug. So that's one. Again, the PTSD thing I think will become more valuable as like the Quest 2 Pro, for example, it's like frame rate per eye has dramatically increased. So like the idea of reality itself, is an interesting exercise. But in general, I will say this, I think it would be ignorant. It would be bad of me to not highlight that gaming is a lot like anything else in the world, that too much of it is bad and not having it is also bad. Right. I think there's also something to say about how often you game, and there's also why do you game, right? Do you game for escapism? Do you game as an addiction? Do you game right? It's really down to the person. I think gaming is obviously net positive, or I wouldn't be in it. In general, there was a study, I forget who, it was a real university, a very legit university that did this. There was a study that showed that kids who play games on average have better like pattern recognition as well as memory than kids and adults who don't, just because a lot of these games are very puzzle driven. And so they are brain training games. And Nintendo DS did this like 10 years ago with, I forget the game, but it's a famous doctor in Japan. So yeah, health and gaming are related for sure.
Thank you. Thank you so much, Jonah, for your input. Thank you so much for being here with us today.
Thank you.
Giving us a perspective that is interesting, to say the very, very least, but thank you so much. Appreciate that. So I know Reggie's online, and if he can join, that would be great. But I do want to get Jeff to a perspective in regards to the innovation of gaming through AI. I'm looking at your screen behind you, and there is a lot of activity going on. And we're starting to look at avatars being created. Reggie, you're here. Awesome. I'm just going to highlight you. And we haven't introduced you yet, and I'll let you do that in a second, but you know where we're going with this question. Is if you look at the development of AI and the creation of avatars that soak up the player's personality, which can be recorded, stored, and built upon, and then then you can actually create an environment where someone may want to buy the character or rent the character of my avatar to win games because I don't have the technical skills to think, but I have the technical skills to fight. Where is that going?
Yeah, I will say the future is going to be really interesting. I think that you have this whole creative industry around game development in Hollywood in general, which there are some parallels for sure. And we're seeing some of these generative AI companies. I'm not sure how many people on this call are familiar with a company called Midjourney, where you can literally type in a few words and it'll spit out a visual, like, so I've seen literally Drake on Darth Vader and things of that sort. And so you're starting to see things that would take a designer weeks on end that are being spit out by a computer almost immediately. So like the creative process for the video game industry, I think has this hopefully potential to reduce the amount of development time. If we look at Riot Games taking 7 years to develop Valorant, imagine a world where that cycle can be compressed into 12 to 18 months. And then, the investments that are coming from either the funds are also going to be realized in a shorter term. So you're not beholden to a much longer dev cycle. So I think there's the potential to just accelerate game creation. And then I think they'll just be a lot more immersive for the consumer.
Andrew, I want to get to you a little bit, but I want to give this opportunity to Reggie. We have an intro prepared for you by Nicole, but coming from you would be best. Don't feel shy. And I'm so glad you're here to meet Andrew, because both of you have something in common, which we can get to in a second. But why don't you introduce yourself a little bit first, Reggie? You're on mute. No, you're on mute.
Is that better?
Now we can hear you.
Okay. My name is Reggie Middleton. My background is in old school
Okay,
hardcore
Jeff,
fundamental.
sorry, Jeff, you need to go immediately.
I have actually 5 more minutes, and I'd love to hear Reggie's
Yeah,
overview.
okay, perfect. Thank you, thank you, thank you.
Okay.
Reggie, sorry.
Hardcore old school fundamental analysis, reading financial statements, balance sheets, cash flow statements, income statements, credit analysis, global macro, etc. I'm known for predicting and shorting Bear Stearns, Lehman Brothers, General Growth Properties, which second largest REIT back in the 2000s, the European sovereign debt crisis, Apple down, Google, Android up, shorted Research in Motion, etc. by 80, 90 calls. Got into Bitcoin about mid 2013. Did a little research, dropped the entire global macro short long business research, into crypto. We created swaps on the Bitcoin blockchain. 2013, we patented the process of doing distributed advanced finance on what was then a relatively simplistic blockchain. Came up with a couple of problems, solved creative solutions for those problems, and patented them along the way. Patents were issued in the US and Japan last year, this year, and hopefully several other jurisdictions in the near future. Those solutions have been incorporated within most of the major platforms that I think people know, Ethereum, Bitcoin, Solana, the concept of NFT transfers and NFT itself, Litecoin, etc. And that's a quick, overview.
That's a very quick overview. If we get a chance, you should actually research what Reggie's doing. And the reason I wanted him to meet Andrew and you, Jeff, is when we talk about platform and gaming, and we talk about both of Reggie and Andrew, and I'm sure you, Jeff, have a stable of patents that, whether people know or not, are being infringed on. I don't know, Andrew, I think, Reggie, you have how many patents now on the back end of financial transactions?
Working on 3, but all the same family. There's maybe about 4, 5, or 6 outstanding patent applications, but 2 or 3 issued.
And these are all related to how things happen on the back end, right? In financial transactions.
It's basically the conditional transfer of value on a distributed ledger using asymmetric key pairs. Now that's corny nerd speak. In reality, you could send a Bitcoin from myself to your address. That wouldn't trip the patent or the claims. If I sent the Bitcoin from me to you, contingent upon the time of day, a particular asset price, or how your wife feels about dinner this afternoon, then that would trip the patent. And most of the platforms compensate validators in such a fashion, or create and transfer assets such as NFTs. NFTs are transferred via data source.
Right. So this gets really interesting. With Andrew, you've got a host of patents in the music and distribution.
Yeah, we have I have 34 patents, 20 issued in multiple countries, but a family of patents, like similar to what Reggie, they kind of work in families. So you go and then you expand. So family of patents, I think we have eight or nine, and then we have close to 40 patents. And then from previous company, I have 12 patents around data architecture and predictive personalized messaging of all things. So a lot of prediction ML AI stuff there.
Yeah, so this gets where it gets interesting is how these things, and if we go back to Jeff and the gaming industry, and we look at what Jonah was mentioning about NFTs, the transaction, the monetary value, what's happening there, Jeff, perhaps some idea from you of what you think or how much attention is being paid to the value creation on the gaming space, and are they infringing perhaps or unknowingly using some of the things of value transfer that both Andrew and Reggie have got patents on?
I mean, it very well could. I think one of the things with when you look at like the blockchain, it is essentially it's a central ledger, so you can actually see the transactions that are taking place. So it's a little bit harder. And Reggie, I don't want to go into your world by any means, the technical side. It's possible, and you know how it's going to impact. I think the larger companies that are dominating the marketplace are always going to be very cautious of infringement. You may see smaller players who are looking to get a competitive advantage, just doing IP theft and technology theft. I'm optimistic that that's not like a bulk of what we're seeing with the whole decentralized Web3 gaming side, but it's possible.
The possibility of that without intention, obviously we can't control, right? But I think what's important here is to realize that when we look at the exchange of value on whatever format is something that we all have to pay a little bit more attention to because of the creation of all of these things that we're doing with the creator economy. Obviously, we like the crypto and the blockchain that allows creators to be compensated and recognized for what they create and do. But we just wanted to bring up this conversation to the forefront. It's something that we all have to, as investors, pay attention to a little bit more strenuously than we have been in the past, because there's a convergence now with the technology and payments and digital images that we weren't paying attention to, 5-7 years ago.
Do you want me to comment or?
No, I mean, I know Jeff has to leave shortly, but if you want to comment to that and then.
Okay. From an investment perspective, because I started as an investor and a macro investor, so did everything, commodities, equities, fixed income, anything, real estate, anything that goes up or down or produce an income stream, we took a long or short position on. Due diligence is paramount. I think practically every investor I've seen in the crypto space and operating entity moving in, primarily money center banks, funds, et cetera, have totally disregarded IP risk. When I go to NFT conferences and I hear professionals on the stage say the only IP risk you have are copyright, potentially trademark. It's not even close to that. Patent infringement risk is much more stringent. The potential liabilities are much larger, and it's clear. These assumptions come from a total lack of due diligence. For instance, in a content creator, you have someone who sells the NFT and wishes to get paid for it, or releases or rents it and gets an income stream. That's infringing. If you move the NFT from address A to address B, you're infringing. If you're using Ethereum with validator nodes, you're infringing, or Solana. And you can, fill in the blanks. And the reason why this is overlooked is because I think the industry, all young industries are immature. That's what happens. Nobody's born 40 years old. So this is not downing the industry, but you didn't have actual business operators who would do a due diligence scan or analysis. And they simply overlooked the fact that the potential for patents exists. But in any tech IP intensive industry, you have a lot of patents. Cell phones, smartphones, pharmaceutical, you name it. And it's just the name of the game. For whatever reason, a lot of people or entities and professionals believe that just because crypto was open source, patents don't apply. But you cannot open source a project or code or anything in perpetuity without protecting the IP. If you wrote code and you want it to be open source, you'd have to take ownership of that code, copyright, create a license, which is an attempt to protect the IP, claim it protected, and then enforce it. And if you don't do that, then someone could take the code and just make it private with a change.
Andrew, what are some of your thoughts on that?
So generally, I approach patents as a long-term potential moat and an insurance safety net, I would say, for like a startup, let's say, or like a company that's growing. So the way I think about it is like we were pretty early in the blockchain space, especially in what we do specifically, which is tracking streamed media. We own blockchain. We own a lot of variations of blockchain tracking of streamed media. So if you're tracking video games, or music for the purpose of count, like how many times something was played, whether that was by file, like is it derived by user interactions, buffering, all kinds of different, if it's CDN enabled or non-CDN enabled, we own all those patents that are issued. There's obviously tons of people infringing on that. The question is whether or not we're going to enforce them or not. And I think that my viewpoint on it is that you generally, it's the same as Web2 in my mind. Like you need somebody big to sue to get money from, or you need to be large enough that you can sue because you were successful. And in both cases, that's sort of a backup plan for whether or not your business worked. So from my viewpoint, I've always gone into patents as building them out as a potential moat to enforce later, or to potentially enforce on a bigger partner who's trying to push you out, or a bigger potential competitor who's trying to push you out. But like, you're not going to go to the local startup and sue them, or you're unlikely to go sue some startup with $2 million in seed funding, because by the time that gets done, they're probably dead anyway. So there's like an element of just sort of protecting yourself and building the moat as you build, trying to carve out your lanes, make sure that you have really well done patents too. Like the quality of patents is important if you're going to actually litigate them. And so, understanding that's how I go into it. I think of it like a safety blanket for success. And I guess the worst case scenario is your startup fails. And if you're lucky enough to have a ton of patents, especially in an attractive space, there's some liquidity there potential for investors. So like if everything goes bust, you can potentially sell these patents or families of patents and provide some sort of money back to investors for the core business not working. So in all those cases, that's how I view patents, as like a safety net, a moat for when you're larger, if your business is successful, and sort of some sort of protection against large competitors who can come in with a larger checkbook later. And so that's how I view patents generally, and I try to build the most robust patent families as possible for those protections. I don't know if Reggie agrees with me. That's how I visualize it when I'm going into things.
And following on to what you said, we have 3 family offices who are very, very, who are quite enthused in investing in the crypto space. Let's see where we specialize. They dump $60 million each. Then they create a consortium. Altogether, they raise, let's say, $200 million private, capital to go into a startup. The startup, hits it big, comes with a large valuation, even goes public. You decide that startup is one of those big companies trying to encroach and push you out. You now have the right to exclude them from operating in the sphere. If their revenue stream is based primarily on your patents, would that make a good investment for the original investors? Or better yet, would that be a material risk for those investors?
I think it's probably nuanced. My answer would be, I think it's smart. My answer is, I think it would be a good investment, because I think you want to be able to sue these other partners that have material amounts of money that they're infringing on your patents for. So that, but I'm also not a patent troll. And I think when you start
But
suing,
before you go on, I think you're answering the opposite of my
opposite?
question.
Oh,
My
sorry.
question was the private equity. Somebody who a friend of yours puts in $300 million into this company, and then gets all the other friends to put in money, $600 million altogether. The company hits it big, but 95% of their revenues rest upon your patent. They compete with you directly. If they succeed, they push you out of business. You decide to enforce your patents for survival. Okay, you want to exclude them from, your business. Would the existence of your patents be a material risk to those investors if they know about it?
For sure.
There you go. So we're in agreement.
Yeah.
Now, if you're going to raise that capital and plow that capital into a company, you would want to know the existence of patents that would exclude that company, 95% of that company's revenues from being generated.
Before you invested.
Right.
Sure.
So the time to find out about the patents is not when, 2 weeks after you did an IPO, like Coinbase. It would be before you cut the first check. Do you agree?
For sure. I agree, 100%.
We're in full agreement then.
Yeah.
Okay, good. Now we can actually move onto the topic that we scheduled for. I've never had this happen. It's been really interesting. It's been cool that we were able to integrate the panels. Andrew, thank you for being here.